The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. Larry will be back next week. And let's go straight into the nitty-gritties. The Dow's down, Dow's up 27, S&P's up 5. They were much, much higher earlier on. And my impression from early this morning was that there would be an upside bias, but the chances are we'll be looking at some kind of a doji narrow close as the afternoon wears on. That's just the way it is. There's still news events to come out today, this afternoon, but my suspicion is it's going to be a wait-and-see attitude as to how successful or unsuccessful the Romney, how can I put it, how the Romney-Ryan team now is going to be able to stack up against the Obama-Biden team. So, and I call them teams because that's how, at this particular, right from tonight, that's how it's going to be evaluated as a twosome. And, of course, the real issue is that it's perception. And I went through a little earlier on things that I thought would be appropriate for them to bring up in their own capacity and where they've been successful. And nothing political in that sense, but just issues that can be brought up. But it's really how Ryan, who has not been in the situation before, this kind of debating situation, how does he deflect or reflect, and how does he physically respond, or does he get mad? Is he able to keep his cool? Is he able to get mad but show niceness with it? Is Biden able to focus and keep focus? Of course, we know these are only vice presidential candidates. Most of the time in history, you've needed no vice president because it's really a token position. In fact, the position as it stands is really to be there to serve if the president is unable to. They don't have any other commitments. Talk about a nice golfing job. Anyway, so, or tennis. Yeah, and thank you, Mike, in the den for asking about my shoulder. I had these 2 injections, but I've developed my own. Thank you, all those of you who wrote in and gave me different suggestions and things. I read them, and I take them seriously. I also love to develop my own types of exercises. When I've gone through therapy, maybe once or twice, I use that as a stimulus for creative ideas. So yeah, my shoulder's getting better, and I did start playing on Saturday. Sunday I did start introducing my left hand into the game, just in case in the future I have to use it. But this afternoon, later on, I'll be going out and playing one of my tough opponents, and he knows I'm not going to be doing anything. I wouldn't say we're playing games. I want to just hit the ball, and I was hitting very nicely. I mean, I'm talking about the actual quality of the stroke. I'm saying very nicely for the arm. On Sunday, I felt very good about it. There are certain things I cannot do, I will not do, not for a long time. I'm not going to push it. I want this to last. So, yeah, I hope it's back to 100%. Hey, I'll even 98% is also good enough for me. Thanks for asking. So, okay, now let's go through this. I want to show you some things that I believe is very important. I've got a Master Trader Series Level 2. For all those of you taking my 2-day course, I used to do 3 days. I used to do Level 1 from 8:30 in the morning to 5 in the evening, twice, Monday, Tuesday, and then Wednesday I would do the 3rd session, which was Level 2 or Advanced. Very often people would stay through 1 and 2 and come right into 3 because they've already been through a lot of it beforehand. But I decided over the years my voice doesn't last, firstly. Secondly, I like the 2 days and then have a break. So I've got a 1 day, which is on Thursday, October the 25th, for Level 2. You can only come to it if you've been through Level 1 or you really are using the Chapman Wave methodology together with other techniques, but I love the methodology based on my CD introducing the Chapman Wave methodology in your own trading or your own analysis. and that you can come in. I want you to be behind. I want you to feel very comfortable. Most importantly, you got to feel comfortable. And a lot of people have done that. Very, very few people, but the ones who have done it, I've discussed it with them, and I felt that it was a very successful thing for them to do. And then they've reviewed over the years different things that were done in level 1 as webinars or whatever. Then the full 2-day one, and that'll be a webinar, not a live here at Babson Executive Conference Center in Wellesley. This will be a live webinar, 2 days, and that'll be, I believe it is the 6th. It's right there on the front page of TFNN. Just went up today. I believe it's the 6th and 7th, Thursday and Friday, December the 6th and 7th, and that'll be from early in the morning. I haven't quite decided on the time. I'm not sure exactly whether we've got a fixed time for it. I usually like to start about 8:30, and it'll go on until after the market closes, because I need to be able to talk to you about what we're setting up for the next day and how we're setting it up, and then we'll follow it the next day. And it's very comprehensive. And I'm absolutely determined with the techniques, the dozens of different techniques. We will focus on some that repeat over and over, but more importantly, what I do, and the timing couldn't be more perfect, is I look out at what chart patterns we're going to be watching for the next 2 to 3 months coming up. What are the patterns that can, and so far, most of them have been very successful, because we've looked at either the cup formation or the arch formation or the dreaded H, a whole bunch of different patterns that repeat over and over, or the rectangle pattern which goes sideways. So let's go on with the show. We've got. I'm going to take calls in a moment. I just want to go through a couple of things right here, and I wanted to show you why it's so important that I keep monitoring gold. Gold is just about to bump into bumping into very strong monthly resistance between, this is the continuous contract, between 1798.10, and the most recent high was 1796.50, and the previous high back in November of 2011 in the monthly chart of 18.17. We've gone to a peak F in the daily. In the monthly, and that peak F says if the technicals are failing, you've got to be careful, because until the MACD goes positive and the stochastic really rings a strong bell by saying I'm now up in the 50-60% area, so the retracement could be even stronger, you can have a right arm, it's called a right shoulder failure. In other words, it is no left shoulder. It's just a right shoulder failure. And that peak F top width was made at, it's a continuous contract, so the price always changes, but the date never does. September of 2011, with the low of 1545, 10, 15. The low of May of this year, with a pretty quick comeback to the previous high, says that is something to monitor really closely. And if I go to the GLD, and this of course is Larry's show, which is called the Futures Hour, and so he also has commodities in it. I'm going to go through a bunch of the commodities. I wanted to show you that there have been 2 cup formations in the GLD. The stochastics at 94%, really strong. MACD is very strong. The relative strength is really strong. On-balance volume is very strong. So why isn't the price way higher than it was back at 174 round number high in May of this year, in the week of the 2nd? Something's cooking here, and tells me there's wheel spinning going on in the gold contract, and that it's in a consolidation phase, and that if the GLD slips further, if it slips underneath 170, then you got to be careful, because the candle of the 26th of September with a low of high of 170.05 and a high of 168.34 becomes the focus. On the upside, the candle with the most resistance is the one with 173.37 high of the 5th of October. First caller, we've got Ari in Arcadia. Hi, Ari. How are you?
I'm doing great, Basil.
Good.
Not at this moment, but I'm interested in the PPLT.
All right, PPLT. Let me see. Oh, this is the physical platinum shares. Oh, this is the, I wrote it down. I forgot to check it out a while back. I said, that's right. This is this is the way to play the platinum. So, okay, folks, we're looking at the platinum chart. I'm so pleased you brought this up. PL.P. So you have no trade. This is my analysis. I'm going to show it here in the den if you're looking at Tiger TV. First of all, I'm going to definitely, I would like to notate this, and we're going to do this together. The monthly chart, let me work backwards. Where we are right now, platinum continuous contract is at 1686.00, up 7.50. It's in leg B, brand new leg B, in the monthly chart with the stochastic at 90% and the MACD very strong. See, here's the difference, Ari. When I just showed you the gold continuous contract, that was not above the April-May highs. This is way the April-May high, which is a peak B minus failure, was at 1618. The week, the week of the 2nd of March this year. And the MACD and stochastic are now much higher. Platinum so far is showing that it's much stronger. And I try to put this into the potpourri of things that I look at, not last night, the night before. And I'm saying to myself, platinum. Now, is that part of the automobile industry? What industry are we overlooking here that is doing very well?
Mostly diesel.
It's diesel.
Diesel. So it goes in all the big trucks.
It goes in as what?
Catalytic converter.
It is the catalytic converter because I know that it's. I know that in automobiles that's what they got. So diesel has
cheaper, and it goes into automobiles.
Aha. And the trucking industry has been doing very well. Not necessarily the rails. Give me a truck. That's JBH Hunt. JBHT, I think would be the symbol. Whoa, look at that JBHT. Oh, man. I'm so pleased you called. So we're going to look at this platinum chart. The platinum chart says that the monthly at PL.P, that's the way I get it here on TradeStation, is acting extremely well in the weekly chart. Oh, there was a weekly chart. I thought it was a monthly chart. Oh, there's the monthly chart. Sorry, it was being covered. Here's the monthly chart. Monthly chart. Oh, let me go through this. This is the one I want you to look at. Monthly chart is very strong. There's a particular pattern that I want you to go through right now. It's where you take the most obvious lowest low bar and you start your count. Well, if you go back to January of 1997, it went to peak A or right down. I'll give the number, but it's not that meaningful because the number always changes. It was 232.90, January of 1997. It ran up for the first time to peak A, B, and C, fell back, made that dreaded H pattern successful, started brand new buy modes. And I'm going to go through those because that's exactly what I wanted to do today. So, Ari, we're going to look at platinum in great detail. We'll be back looking at it based on the Chapman wave. I'll be back, 877-927-6648. Basil Chapman sitting in for Larry Pesavento.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
All right, folks, we're back. Basil Chapman sitting for Larry Pesavento, the Futures Hour, and Dow's up 23, S&P's up 525. Well, let me show you something here. In the monthly chart of platinum, we're on with Ari in Arcadia, and we're looking at the monthly chart. There was a restart. I will teach in the Master Trader Series what exactly is a restart. When it restarts in October of 1998, after the arch formation, it starts a brand new ABCD. It stops at peak D in November of 1999, and then there's a technique that it took years to discover. I wait for techniques. I never look for them. They just jump out and say, "You idiot!" Well, they use stronger words than that. What have you been doing? Have you not seen that I've done this 8 out of 10 times or 9 out of 10 times? And then I said, oh my goodness, look at that. Well, that's what happened with the instant restart. I realized that there was a technique that involved another buy mode. It's just a fantastic technique. It was all you need to do, as long as the technicals are holding strongly or the chart pattern strong, you just stay in that position or take some off at peak D, because that might be what your requirement is, and leave the rest to run. And look what happened. The 9-period moving average wasn't broken until after it made peak C, the second buy mode, pull back, and had that right arm extension to D in May of 2001, where the technicals were fading, and then it plunged all the way down to a doji low. October of 2001 started a brand new A, B, C, D. Then it goes, that could be an instant restart right there, August of 2002. But the technicals were so strong, it's easier just to keep the wave count going with the next letter in the alphabet, which is A. And then it goes to an F, and that's where the technicals fail. In peak F is where you get the strongest decline, and this is exactly what happened. Pow! In 1 month, April, it goes from the high, in this case, of 987 down to a low at the beginning of the next month of 810. That is huge. And then it starts a brand new peak, ABC, walks the 9-period moving average, goes to a D and then an E, and an E, D, E, and F is where you've got to be a bit careful. The technical's failing, the stochastic was failing, on balance volume gave you a short-term sell signal, which turned out to be a deeper sell signal. MACD turned around, he went from a high in May of 2006. In 5 months, he went right down from the 1385 level to 1075. It's a 300-point decline, and then you get a gray peak A, B, because everything about it says the MACD is flattening out. It's not expanding the beta between the fast-moving average and the slow-moving average. Stochastic is rising, so there's what I call, I call it the gray. It's a sub-wave count underneath the major high that was made in May of 2006. When it breaks out, what happens is you have a wave count that's parallel. In this case, it's F/C, and it goes to peak F March of 2008 at 2,277, and then plunges where to? To exactly the thing that you wouldn't even be looking for in 2008, but you definitely, beginning of 2008, but at the end, you're definitely looking at, and that is the 200-period moving average. And there it is. It hits it exactly. October of 2008, and now it's gone. Peak A, B, C, D, all the way up to May of 2010 at 60.74. It pulls back, holds the 9-period moving average, has another very quick ABCD. What's the rule? The quicker you can go ABCD, quicker you've got to expect a pullback. It doesn't have to be a serious decline, but at least a pullback. In this case, it is a serious decline. It goes down to lower lows. It goes from the 1879 area in August of 2011 to a low December of 1259, tries to bounce, goes to A minus, retests with the dreaded H. It goes down to 1273. Now in the dreaded H, when you don't close below the left side low, but you go below it, close above it, it says you can rally, but you're definitely not going to rally above the previous arch high. But if you do, and the technicals are following, and they're beginning to right now, that is very positive. So this is a move that has to be taken seriously, Ari. So far what I've explained is that the platinum continuous contract is in a rally, a retracement rally mode, and acting very well on the monthly. The weekly has acted extremely well, but how October closes is going to be very important, because if it breaks down and goes into 1678, if it goes under 1599, then that says, uh-oh, be careful. It's just a high level, great action, but still a high level consolidation way under the previous high. Now we're going to go to the daily, and if you don't mind holding, I'll be right back, and we'll go to the daily, and then I'm going to ask you your opinion of what's going on as well. Hold on, we'll be back with Ari in Arcadia looking at platinum, and then I'm going to go through a whole bunch of charts straight after that.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations, including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Hi, folks, we're back, and we're on with Ari and Arcadia, and we're looking at PPLT, which is the ETFS Physical Platinum Shares. Now, this has got a chart pattern that I'm looking at. I'm trying to find in my book here of patterns. What did I call it? It calls it the carrot. This is the double carrot. This is really important. I'm so pleased that I went to not just the continuous contract, I went to the futures, but then I went to the weekly, because this was an IPO just back in January of 2010, so there's not that much history in the monthly. Certainly there is in the weekly. And the weekly chart said that it made a very unusual, I call it, this is the Bart Simpson hat top, where it started back in at Peak D on January the 12th, 21st of 2000, the week of the 21st of 2011, went to Peak D, then a slightly higher high Peak E, the week of the 11th of February, pulls back, doesn't break anything, runs up again to a right arm extension. That's like the rogue wave that I was talking about in my show earlier about Costco. So on the 29th, the week of the 29th of April 2011, goes to 186.48, pulls back, doesn't break anything, and then it goes to a final, the third. It's really the second carrot top that I'd be looking at, 189.20 on the week of the 26th of August, and then it plunges down to a low of 133, round number low on the week of the 30th of December, goes to A, B minus, fails, comes all the way back, but doesn't take out the left side round number 133. It goes to 130. 136.74, then it goes to 136.18, then it goes to 135.80, building a base above the left side, most important key low bar. Then it starts a brand new peak A, B, C, and lo and behold, unlike the weekly chart which went to B in the platinum continuous contract, this has gone to a leg D, which is a possible peak D today. Now I have different information, Ari, because the tops before were 170.97, 171.46, the week of the 2nd of March and 24th of February, March, and February 24th. This time it's only gone to 169.30. So here again, you've seen a rally. Very, very good technicals like we were looking at the GLD contract, but the price never went to a new recovery high. Can it? Sure it can. But right now it's saying, I might have to do a little testing in the 161 to the 159 level where the 200 period moving average is and the 9 period moving average at 157 is. So, and the daily has made a peak D. So let me ask you, what are you wanting to do?
I think you have an error on your Chapman wave.
All right, where?
Around February. It's not a B minus. Yeah, February. For the weekly, it's not a B minus, it's a B.
Yeah,
the weekly. You need to go to weekly chart.
Yeah, I'm looking at the weekly.
You have an A and then a B minus for February. It's a B. And this is why it's important, because I'm hoping that we go down a little bit, create a brand new A, B on a weekly, and then we exit on a C, and we'll have a double wave C.
I see. Okay, I understand what you're saying. Well, I have to call it a B minus. We're talking about the one on the week of the 2nd of March. Why?
So low.
I'm sorry, what?
It
didn't make a new low, but look, it's used up time, it's used up price, and I've got in the stochastic and MACD, I've got a brand new buy signal, number one. Number two is, you know that I like to look at the most conservative by trying to get as many of the peaks and troughs as possible so that I move quicker to what would be a leg D. Remember, I did that when we were looking at, when I was with Ilona and we were looking at the EUR USD. I said, I'm counting, even though there's a possible mistake, I'm counting the high of 1.31716 on the 17th of September as the start of a new buy mode that goes to peak D with a doji top, and that turned out to be correct because I was most conservative. I went for the waveform that took the most number of peaks in that amount of time. So I'm being conservative here, and I'm saying that in the PPLT weekly, it's safer to consider this. None of what you're talking about, it makes no difference, because why? If it pulled back and the stochastic is 86%, if it does not go under 80% in the weekly, there's a good chance that the PPLT will hold, that's the physical platinum shares, will hold as really good support between that 161 and 150, 158 area. So do you understand what I'm saying?
Yes.
So I've put an up arrow. Maybe what I should have done is kept the up arrow on the left and made this a plus sign. But I always do this. If you have a complete buy mode going from A, B, C to a D, that's like an up arrow. That's a completed one. So that's why I always put in the up arrow. So none of what we're talking about is really different. Folks, what Ari is saying, he would like to see a 171.47 or higher, because it will go above that peak B that was made, the second peak going to the week of the 2nd of March, correct?
Correct.
Okay, and I'm saying, never skip peaks. It's very important to be as diligent as you can, and there's a whole series of peaks that gives you a D with a doji candle possibly this week, which says, hey, be careful, there could be a bit of a pullback. I like the platinum chart. I would say I'd like it to pull back, and I'm going to have another look at it. If it makes a new high, that's very positive. But I suspect it's actually going to pull back to the 163.10 to maybe the 162 161.60 area over the next 2 weeks or so. And that's going to give me really good signs to say, hey, there's a rectangle formation forming, and that's potentially very positive as a high-level consolidation. Hope that helps you, Ari.
By the way, I'm in agreement with you 100%.
Oh, good. Thank you very much. Thank you. I appreciate that, and it's a compliment to have you agree with me because I know you make some fabulous trades. Thank you for calling, Ari.
Thank you. Bye.
Bye. Now, let's just do this. I've got a whole bunch of things. I'm just going to grab them as I see them. At RR.P. That is the rice continuous contract. And the rice continuous contract, didn't I just do that? I guess I didn't. I'll do it right now. I thought I did it. Going from the low of, here we are. I'm putting in an up arrow on the December of 2002. And if I count each successively higher peak, I go to the first peak on the 4th, that's April of 2003. Second peak in August of 2003, that's B. C is January of 2004, and lo and behold, D is May of 2004. Let me put them in now. So that's A, B, C, D. Look at the stochastic and the MACD, how they're rallying so strongly. Pulls back, starts another buy mode. So I put the up arrow right here. I first of all want to put the troughs in. So it's trough A on the way down, lowercase letters, A, B, C, always alphabetical letters. Can never get more than a G. There's no H. Now we start a brand new buy mode, and that goes A. Let me give you the names first. Starting on September of 2005 at 17.035, it goes peak A, February of 2006, B, May of 2006, C, August of 2006, and A, B, C, A, B, C. There's D. D is November of 2006. I'm going to put my A, and we'll study and see where the stochastic and the MACD are. So D. And that says, okay, put in a down arrow. What happens is it pulls back. It doesn't take out the original low of 70.03 of September of 2005. Instead, it has a screaming, a parabolic move to the upside, and that gives me a peak E, right arm extension. And the stochastic has already pulled back. Stochastic's already failing back in March of 2008. But April of 2008 goes to 30.46, and I can't put the down arrow. I've already done it. So this is an extension, and I put in the inverted V cap. This is the little caret. And that says, okay, you went higher than was expected in a single move, but you gave a sell signal and you plunged. There's that Eiffel Tower. Straight up, straight down, like a capital A. Then it bounces, goes A, B, C, fails. C minus is always very negative. So that's A, B. Did it even make a B? No, it just went to B minus, B minus. There it is. B minus, very negative, not going to a D. And it plunges down to a low in June of 2010. Then it goes peak A, B, C minus. So rice is given back. It's made the arch formation and says there's nothing to do with rice in the monthly chart. You can have shorter term trades, but until there's a break, either down or up, of the trading band that I've just drawn, and that would say rice has to climb above 1665, above the April 2012 high, rice isn't going anywhere. And look what happens. The weekly chart confirms. It's just the H goes to an M formation, nothing there yet, and the technicals are weak, and the rally in the daily has failed. So that's rice. Now let's go to LH. That is lean hogs. And lean hogs, monthly chart goes, there's that cup formation. Remember, we just saw that in the S&P and the Dow. You go to this cup formation, it made a peak G high. Let me just squash this so you can see how far back. So there was a buy mode back in November of 1994. It screams to a rare peak G, but that's because the MACD, fast moving average, was positive all the way through. Plummets down, goes to trough E, and then it goes to one peak D from the low of December of 1998, it goes to a peak D. In April of 2008, pulls back and makes another D. How many Ds have we seen here? And what did I say? Failing a peak C is very bad. It's very negative. And there's the arch formation, the dreaded H formation in the lean hogs that says that the high of February of this year, you've got to be real careful because there could be another bounce. But boy, if this thing takes out, this is the continuous contract. The low of May of this year is going to retest the major low of August of 2009. All right. Now let's do this. I wanted to go. So I had a question on Mosaic. And what I said was, let's see. Is that something I'm going to do now? Let's see. Mosaic. And what I said was that Mosaic was... had a major move to the upside. So anything that happens here has to be treated as possibly a counter-trend rally. Oops, that's not what I wanted to do. I want to go there and pull it back. But let's just do it right now from here, from the low bar that was made in Mosaic. MOS is the symbol. The low of November of 2008 at 2194 went to a peak A, a peak B, a peak C, and lo and behold, you get your D. How many times can this happen? It is just extraordinary. This technique that I discovered years ago, how many times you can actually get peak Ds. Let's do the monthly one from that incredible move. I remember being on air when we saw this move. It was just unbelievable. I hadn't seen anything like it. 582 was the low in October of 2003. What does it do? It goes to peak A, B, C, D. Makes a little P, A, B, C, D, and that goes to a high of December of 2012. December of 2004. Pulls back, and it starts a brand new buy mode that goes, I don't even know if it's going to work out. Let's see. It goes peak A, but then it's an A minus. Just like Ari and I were talking about, you've got to do the restart. So it starts with a doji low in May of 2005. It goes to a single leg A, pulls back, holds the previous low of 1236. It goes to 1250 in November of 2005, and then it has a little peak A, B, C, and it runs, and it runs, and it goes to a D, all the way up vertically, a D in February of 2008, 119.78. Then it goes to an E in, unbelievable, an E in April of 2008, and then it goes to a peak F. In the Chapman wave, a peak F with the very poor technical says, watch out below. And look what happened. In 1, 2, 3, 4, I mean, this is amazing. In 5 months, it went from a high in June of 2008 with a round number low of 124 to a high of 146.92, all the way down to where? The 200-period moving average, right at 21.94. Is that a decline, or is that a decline? All right. So I've had a little fun there going through those Chapman wave forms, and I'll be right back in the last segment. I'm going to go through the E-minis, the Russell 2000. I'm going to go through the futures, and we'll see what is in store over the coming weeks, coming days. What should we be looking for?
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, folks. We're back. And don't forget, stay tuned, because straight after this, you've got the, what is it called again? Directional Hour, Directional. Oh, Daryl Martin, of course. I want to always remember. I remember the Daryl part. Daryl Martin, and you've got just that program is really interesting. It's the Diagnostic Trading Hour. Thank you, Alma. But I'm going to just print it right up here and have it in front of me. You know, I'm so busy looking at the charts. It's so easy to get your mind wandering, to lose the focus there. Diagnostics Trading Hour, just a great show with Daryl Martin. Then another great show with David White, where he looks at the way he treats volume, the way he adds, the way he extends he looks at the Gartley and the butterfly, but he also uses his own relationship of volume to price. Just great trading tools. Then, of course, you've got Ken Shreve, who knows exactly how to use the cup and handle, my least favorite chart pattern, but he uses it fantastically. And then, of course, Tom O'Brien, who comes in 4 o'clock till 6 and just wraps it up with all his insights and all his knowledge, and just a great show. So stay tuned. Now, let's go through this. The NQZ, that is the December NASDAQ E-mini contract, is making the pattern I call the dreaded H. Talk about the peak Ds. Look at this. From the low bar of the 1st of June, it's got one peak D made at the doji high on the 5th of July at 415. Pulls back, starts a brand new buy mode, goes to another peak D. That's 4 higher peaks on the August the 21st at 4:15. Pulls back, has a doji candle, then it squeezes in a very quick ABCD, and it goes to a high of 2871.75 on the 21st at 4:15. And it pulls back, and what's happening is the left side, right side price time match, which says if the MACD remains wide between the fast moving average and the slow, then by the 18th at 4:15, what's the day? 11th? Oh, that's next week. The test, a very important test of the 26.95 low of the 7th of August is there. If it breaks under that, then 26.14 would be the 200-period moving average target. What would change that? If there's a spike that holds above 24.65 by this afternoon or tomorrow morning at 10:05, that'll say, okay, save the day. Now let's look at the ESZ, the E-mini. That E-mini is in an up channel. It's got the gray zone right here that I'm looking at. It made a double top. That's that drop bucket formation. It's gone underneath the previous low of the cup of 1424, and it says be careful, because if this up channel support breaks, and that would be at 1413.25, then this gray zone, I'm going to expand a little bit, would take you down to the low of 1387 in a potential one-to-one expansion of this cup formation. On the upside, if there is a spike that takes out 1454.50, that's a lot of points, 200 points in the Dow, that would say that there's a good chance you're going to make another cup formation and retest the 1464 to 1468 area. The TFZ has a pattern that is a failing pattern. It went to a peak minus, a peak C minus. Remember, that's terrible. So it gone to a peak, went to, even, folks, I do this. I used to do hand charting, so I know about the point, single price point, like you see in mutual funds on a daily basis, you get one price point. Well, in this particular instance, from the low of the 4th of June, it's gone peak A, B, C, D to a high of the 4th of July, pulls back, starts a brand new buy mode on the 24th of July, goes to peak D, runs up to an E and pulls back. If the TF breaks under 820, it's at 828.50 right now, that'll be very negative to fall that entire area between 810 and 815. On the upside, it needs to get to 838. Thanks for being here. Stay tuned for Daryl. I'll be back tomorrow, my usual time. My service is there, open call, and check out my Master Trader series. I know you'll love it.